Have you ever opened YouTube, typed best investments, and suddenly felt like you were drowning? One video says, buy these 10 stocks before it's too late. Another screams, crypto is the future. Someone else is yelling, ETFs, bonds, commodities, REITs, AI funds. This one trick could make you rich. And meanwhile, you're just sitting there like, bro, just tell me what's good and why. Well, today's video is exactly that. We're cutting through the noise. No jargon, no hype, no stress, just calm, smart, simple investing, explained like I'm your financially nerdy friend who also likes memes and snacks. Let's dive in. Why investing feels so overwhelming today. Okay, picture this. It's 1990. You want to invest. You have maybe 4 options: stocks, bonds, real estate, or a savings account that pays more than 0.37%. Today, you have 10,000 plus stocks, 11,000 plus mutual funds, 3,300 plus ETFs, cryptocurrencies, REITs, fractional real estate, treasury bills, index funds, meme stocks, AI sector funds, global funds. Oh, and every TikTok investor who bought 1 share of Apple suddenly becomes your financial advisor. No wonder people feel paralyzed. The real problem: information overload. When you walk into a grocery store and there are 40 types of cereal, you freeze. You stare at all of them. Your brain starts overheating like a cheap laptop. Now multiply that feeling by 10,000, that's investing today. There are too many choices, too many opinions, too much noise, and the human brain does something funny. When we can't choose, we choose nothing. That's why most people never start. Another problem: everyone has different goals. Some people want fast money, slow and stable money, passive income, retirement income, money they can cash out next year, money for 30 years from now, safety, maximum growth. But most videos online assume everyone is the same person. Spoiler, we are not. The final problem: no one explains why people don't want buy this fund, buy this coin, buy this stock. People want why this, why not that, why now, why does this fit my situation? And that's what we're fixing today. The simple framework for knowing where to invest. Before we talk about stocks or crypto or ETFs or anything, we need one simple question answered, because this question determines everything. Ready? Question 1. When will you need this money? This is the entire game. There are only 3 possible answers. A. I need the money soon, 0 to 3 years. Stop. Do not put this money in stocks, crypto, AI funds, real estate, anything high risk. Why? Because if the market drops 30% next year, you won't have time to recover. This money should be in high-yield savings, money market funds, short-term government bonds, T-bills, CDs. Safe, boring, reliable, not sexy. But if you need the money soon, boring is your best friend. B. I'll need the money in 3 to 10 years. This is the medium risk zone. Here's what makes sense: 60 to 80 to 40% bonds, a balanced ETF, some real estate or REITs. Optional 2 to 5% crypto, only if you can stomach the roller coaster. This is the zone where you want growth but not heart attacks. Something like Vanguard Balanced Index Fund, iShares Aggressive Allocation ETF, Schwab Target Date Funds. Set it. Forget it. Let it grow. C. I won't need this money for 10 plus years. Okay, now you're in the wealth building zone. This is where stocks shine. Here's why. Fun fact: there has never been a 20-year period in US stock market history where the market lost money. Not one. Long-term investing is where compound interest does magic. Remember the famous fun fact? If you invested $10,000 in the S&P 500 in 1990, you'd have over $200,000 today. Doing nothing, changing nothing, rebalancing nothing, just letting it sit. So what makes sense here? Index funds, ETFs, global funds, REITs, a small slice of crypto, AI tech funds, individual stocks, small cent. 10 plus years equals you can ride the ups and downs easily. Okay, but what is good and why? All right, now we can answer the main question. Here's the part everyone wants. the simple, no BS guide to what investments are good and why they're good. 1. ETFs and index funds, best for almost everyone. Think of an index fund like a giant smoothie. Instead of buying one fruit like an apple stock, you buy the whole fruit store. Safer, more balanced, zero drama. Why they're good: diversification, low fees, easy to understand, historically strong returns, zero stress, perfect for beginners. If you want one place to invest and forget about it, this is it. Examples: S&P 500 ETF, VOSPY IVV, Total Stock Market ETF, Global ETF, VHD. Pick one or two, you're good. 2. Stocks, higher risk, higher reward. Individual stocks are like dating. You can find the one, or you can lose all your money and cry into a burrito. Why they're good: high growth potential, ownership in companies you believe in, fun to follow. Why they're risky: one company can crash. Emotional investing, you need research, not ideal for beginners. A good rule: 80% ETFs, 20% stocks you love. Bonds, grandma's favorite and still awesome. They're safe, steady, predictable, like the friend who always shows up on time. Why they're good: stability, lower risk, good in bad markets, predictable returns. Examples: U.S. Treasury bonds, corporate bonds, municipal bonds, great for reducing stress. REITs and real estate, income plus growth. You don't need to buy a house to invest in real estate. REITs let you invest in apartment buildings, shopping malls, data centers, warehouses, hospitals, without being a landlord, without fixing anyone's broken toilet. Why they're good: passive income, good long-term growth, diversification. High risk, high reward, handle with care. Crypto is spicy, not bad, not evil, not magical, just spicy. Why some crypto is good: high potential reward, innovation, hedge against traditional finance, global adoption growing. But also extreme volatility, regulatory risk, emotional roller coaster. So here's a healthy rule: 0.5% of your portfolio. Not your rent money, not your emergency money, not your grocery money, just spicy money. Sector funds like AI funds. These are funds focused on one industry: AI, robotics, space, biotech, clean energy. Why they're good: focused growth, invest in future tech, high upside. Why they're risky: if the sector suffers, everything in the fund suffers. Use them like hot sauce: a little good, too much pain. So which ones are good? Here's the simple breakdown. Most people should start with S&P 500 ETF, Total Stock Market ETF, Global ETF. That's it. Then optional: REITs for income, bonds for safety, crypto for spice, AI funds for future growth. You don't need 92 investments, you need a few great ones. Putting it all together: easy portfolios. Let me give you 4 very simple, beginner-friendly portfolio examples. These are not financial advice, just examples of how people simplify investing. 1. The I don't want to think about anything portfolio. 100% target date fund. Auto-adjust risk as you age. One fund, done forever. 0 brain cells required. 2. The super simple index portfolio. P 500, 30% total stock market, 20% global stocks. Diversified, elegant, stress-free. 3. The growth plus safety portfolio. 60% stocks, 20% global, 10% bonds, 10% REITs. Balanced, stable, long-term. 4. The future tech portfolio for long-term believers. 70% broad ETFs, 10% AI tech ETFs, 10% global, 5% REITs, 5% crypto. For people who believe the future is digital, automated, and robotic. Here's the truth: you don't need more information. You need better filters. Investing becomes simple when you need the money, how much risk you can handle, and what your goals are. And once you understand those, all the noise fades away. Investing stops feeling overwhelming. It stops feeling scary. It stops feeling like an exam you didn't study for. It becomes a calm, steady habit, like brushing your teeth, or watering plants, or aggressively ordering stuff you don't need from Amazon. If this video helped calm the chaos in your brain, if it made investing feel less like a panic attack, Or if you simply enjoyed hanging out with me for a bit, then do me a favor, hit the like button, drop a comment. What investment are you most curious about? Share this with a friend who is drowning in financial confusion. And of course, subscribe for more simple, friendly financial wisdom. Thanks for watching. You're doing great. Your future self is already proud. See you in the next one.